A lot of puppies got some new bones for their ongoing pandemic lifestyle, judging by Chewy's earnings last night. Chewy CEO Sumit Singh is here with us now for a chat. Sumit, always good to speak with you. Something caught my attention on your earnings call last night. Your business actually accelerated through November, but you said it's not some form of COVID-19 pandemic phenomenon. Explain that to us.
Yeah, we believe, hi Brian, good to see you, good to be here. We believe what we are seeing in Q3 into Q4 is in fact organic and structural, not necessarily driven by a second surge of COVID or the pandemic. And there's a couple of reasons for that. One, when we internalize our data, we are not seeing metrics shift or behave in a manner that we saw when customers, displayed pandemic buying, ordering similar type of items and greater quantity of those, or disrupting their purchase frequency. We haven't seen an indication of that yet in the data. Externally, when we actually look at our cohorts, what we're finding is our cohorts are larger. Obviously, that is expected. But our overall retention year to date, including active customers and customers that we've acquired this year, is up more than 600 basis points on a year-over-year basis. You combine that with the fact that cohorts this year consistently have spent over 10% more share of wallet than our legacy cohorts. It lends us to believe that the tailwinds that we're seeing are secular and that they are structural in nature. The drive in revenue is as a result of ASP and mix and holistic basket building rather than any kind of pandemic-induced behavior that we saw in Q1.
Well, Sumit, there is one pandemic behavior that perhaps is affecting you guys, and that's pet adoption. I mean, I've had trouble finding sort of hard numbers because it's very fragmented, right? People adopting from local shelters and such. But anecdotally, there has been a boom in pet adoptions, and one would think that that's had an effect on your business. So I wonder if you've seen that, not just in the overall numbers, but specifically for training books, for example, or any kind of educational materials for all these people who are getting new pets.
Oh, 100%. I do not mean to imply that the pandemic hasn't provided a boost or it isn't helping. You are 100% correct. We, in fact, I'll give you a data point. We have pet profiles, over 10 million pet profiles created. And what we observe is 40% of pet profiles created. No, we're seeing a 40% increase in pet profiles created for adopted pets this year. And clearly, when we look at our data, we believe that pet ownership is up 17 to 22%, obviously driven by the fact that people are home, given that we've been in this extended kind of pandemic. So there is no doubt that the pandemic has provided an overall boost into secular tailwinds that already existed. The comment, specific to the comment that I made earlier was specific to the results that we saw, as the acceleration happened into October and November. That was more about the holiday sort of extending, and that was more about natural engagement from customers. But when you look at the core inputs, yes, a lot of new customers, a lot of new puppies and kittens at home driving the fuel.
Sumi, obviously you're an online focused business, but just in light of some of that data and where things can go next year with pet adoption and the pandemic, I mean, do we need pet stores anymore? What's the outlook for traditional brick and mortar retailers that sell pet supplies and food if your business is growing to this extent?
Look, I think we can expect to always have a healthy mix of retail and online. Online penetration was expected to reach 22% at the end of this year, pre-pandemic trends. And that has been accelerated to now reach north of 27 to 30% by the end of this year. That still implies that 70% of sales are happening in retail. And yes, Brian, I think it's appropriate to say that those of us who are practitioners of online believe and are bullish in the fact that the online penetration or the secular tailwinds will continue for online to be able to get up to 45% share of penetration. But that still leaves a really healthy mix of retail. And what we also observe is that most customers, right, cross shop. Over time, they eventually end up settling on one retailer, and that retailer of choice for them ends up to be Chewy. But customers cross shop for purchases all around their life cycle. So we see an opportunity for both coexisting here. Multiple winners to emerge in the category that is growing at 5% CAGR.
On Monday, Sumit, you lit up 12 more states as part of your new telehealth option. You're now in 47 states with a service that really, in many respects, doesn't exist anywhere else. How do you plan to monetize that business?
Yeah, so today, Connect with a Vet is a service that we've chosen to offer to our loyal Autoship customers. We believe the purpose is to, A, be strategic in our approach, to learn how a service like this can lend fuel into acquisition into the Autoship program, retention into the Autoship program, consideration broadly from our Autoship members into our healthcare verticals. So it's all about building consumer consideration and loyalty while we learn our way and perfect the experience and the product. Over time, we certainly desire to expand this product to be able to offer it to all customers. And we're also going to think about differing ways of monetization. The way that we're thinking about Autoship, it may not be directly monetization in the way that we're charging them, but the returns that we generate out of Autoship both help the top line and fuel the bottom line. So multiple ways of thinking about it.
And connected to that, you all are also looking at the compounded medicines business for pets. How are you thinking about that business? And I'm also curious about the profitability, the margins on a business like that versus your sort of bread and butter business.
Great questions. Compounding medication came about because as we have learned our way into prescription medication, we found that there are millions of pet parents out there whose pets require customized medication, who can't perhaps take a pill and they need the dosage in a liquid form. Well, bulk suppliers or bulk manufacturing does not produce or does not cater directly to that level of customization. So we said, okay, if this is a personalized offering, we should be able to step in and offer a direct-to-consumer option at scale and also pioneer bar-raising experiences along the way, because it isn't a category that has been explored in the past in the way that we're thinking about it. So that's the way we thought about it and why we stepped into a fragmented billion-dollar space today, which we believe, by the way, is compressed due to the lack of compliance, lack of availability, and lack of awareness in the particular space. And I think your intuition is spot on. Compounding medication, we expect to be gross profit accretive to the base business by a few hundred basis points in the future.
Very interesting. All right. And now, Sumit, I got to end on a bit of a lighter note. I'm curious what the most popular gifts are that people are buying for their pets this holiday season.
This is the joy of working within pets. We have gingerbread cat houses. We launched a line of retro toys that have been, people are having a blast with that. We've got boom boxes and gramophone records and the old video cameras. We've got food-themed toys. Picture frames have been really popular with our personalized catalog that we launched over the holiday. So overall, we've had a lot of fun with gifting this season, driven by our improvements in site merchandising as well as broadening our assortment that we brought to customers.
Well, pets are definitely living a better life than me in many respects right now. They're going to have a very good holiday season. Well, we'll leave it there. Chewy CEO Sumit Singh, always good to see you. Have a good rest of the holiday season.
Thanks, Brian. Thanks, team.